Okay guys, Sunday the 25th of February, so let's have a look at the FTSE 100. We're going to have a look at the market from last week in relation to our Sunday analysis, and then a look at the market for the trading week ahead. Now just before we start with the review video for the FTSE, I got commented last week that these videos, they're a little bit repetitive in terms of, we're going over support and resistance levels each week. I completely understand that, but these videos are one of the most important things that I do for me each week going into the trading week ahead. So there's loads of videos that I do on psychology, technical aspects of trading. There's things about certain indicators that you can use, and it's all great when you're learning how to trade. But to go into the trading week ahead, this is what I take into the trading week to make money. So it's very, very important. And the Sunday analysis is basically setting yourself up for the trading week ahead. If I didn't do this, I couldn't trade full time. This is very, very important. So when you get to that level where you are ready to start trading, rather than simply learning more and more things about trading, when you're actually ready to start going onto the charts and trading live, this is what I do every Sunday. I set my charts up, I set my levels up, I get everything into my head, what I'm looking at for the trading week ahead, and then I take this into the next week for day trading. And then all I do is Monday, Tuesday, Wednesday, Thursday, Friday, I take this information, I refine it each day depending on what the market has been doing, and this is what allows me to trade effectively. So it's very repetitive. Trading is very, very repetitive. You're finding your edge in the market, and then you're just doing the same thing over and over and over again. But if you are looking to trade live, this should be very useful to you, especially if you're day trading. I'm a day trader. This is how I set up for the week ahead. You're getting the information that I'm taking into the week ahead on the Sunday that I look at. So it's really helpful for me to set up for trading. I know it's helpful for lots of zone traders because they do exactly what I do. And if you are trading live, really this is the type of video that you should want, rather than the video about a different indicator or how to spot something in a market, because this is what allows you to actually trade. And these levels are the main areas that I watch on the charts. So from last week, what we were looking at, I've just put in the zones that we went over from last week that were actually used. There's no point in plotting all the zones that were up here, all the zones that were down here, because the market didn't press to those levels. And what we can see is on Sunday, the candle is testing at this 300 to 322 level. Then on the Monday, we reject the level, we come all the way down. Market's breaking down. You can actually see it on the way down. So on the Tuesday, we're popping up, we're testing as resistance, we're then breaking all the way down. On the Wednesday, we had a very, very strong bullish rally, which then failed. We came down into our key level of support, we bounced, came back down, tested, bounced, came back up, and tested as resistance. And this is why doing your Sunday analysis is very important, because for day trading, what I do is I take these, and then each day I refine it depending on what the market's been doing day to day. I set my levels, I find the exact levels that I want to watch. But these levels, you can see they're very, very effective. And that's why we do it each Sunday. And you can then implement your trading plan, whatever your trading plan is. And zone traders who watch this video, they implement the zone trader trading plan around about these zones, and that's what allows you to make money. And that's what trading is all about. We're here to implement our edge on the market and make money. Okay, so coming into next week, what are we looking at? Really, the zones are pretty much sitting at good levels. So what I'm going to do is I'm going to adjust a couple of them, because what we're doing is we're taking the most recent price action that the market has given us. And you've got to remember that support and resistance levels, they aren't infinite, they do change. And what we do is each time the market makes a new movement, a new swing, we look to our levels and we think, is this telling us that they're not quite right? So what I'd say now is we have a level sitting around about 7,205 to 206, down into, let's have a look here, down into 7,185. Remains a strong level of support. Then we have another one at 7,169. I'd really say this one comes down to 7,160 right here. So what we're doing is we're really splitting the levels a little bit, looking at this price action. Now we may as well put in the next one as well, in case we do come down to these levels. Around about 7,145 down to 7,135 right here. So the first thing is coming into this market for next week. The overall analysis hasn't really changed. So although the market had a very strong downward move, although the market has been pressing higher, as we went over last week, it wasn't giving us overly bullish sentiment. And then we can see coming into last week, we had another strong move down. Now we've started to bounce once again. But similar to last week, it's really only if we start getting back up above this gap level. So over the weekend, you can see from Friday to Sunday, the market made the large gap down and then continued on with this very, very strong bearish movement. Large gaps like this on markets, they tend to be areas of support and resistance moving forward. So until we really start to break up above this level, I'm still more than happy to sell into this market moving up. Really 7,400 down into 7,385 right here. Very key resistance. We've also got another level just down below at around about 7,3. In fact, let's bring this up a little bit. I'd actually say we could take this all the way up to 7,375 down into 7,355. There. Key level of resistance also. Until we start breaking up above this level, more than happy to sell into this market, even if we start pressing up. Really, the whole thing is one zone. But I'm looking at it as two separate areas. I'm looking at it as the area where the market gapped down to and the area where the gap was created. You can actually see we've already tested it on the 5th of February. Very, very key resistance on this market moving forward. For key support on this market, it remains the levels down here at 161 to 170, 130, around about 135 to 145. This is the main support levels. So really, we need to see the market breaking above this level or below this level right here for longer term, medium term sentiment. If we're breaking down below this level, really, after so many tests now, I'd expect at least 7,095 to be tested, but really, if we're breaking down once again, I'd expect a stronger correction on this market, at least down to, let's have a look, at least back down to test at the 7,050 to 7,000, this whole section right here. And really, that's not overly key levels of support. The real key levels start coming back in at 6,950. So if we're breaking back down below this level now, there's the very real possibility that we're coming all the way back down to test at these previous lows at 6,950. Excuse me. Up above key resistance, it's only if we start breaking up above those levels that I'd then be happy to start looking for stronger bullish bounces. At least up into that MA200 level, which at present is sitting around about 7,450. Let me get rid of this one. Yeah, and the next key resistance is going to be up at 7,400, around about 7,470. Basically testing back into this key swing level right here. You can see tested as support, tested as resistance. Even as we break up, we're testing it before we bounce away. This would be the next key level. In between this level, still remain a little bit more neutral. So we're coming back up at present to these previous highs. Remains a good level of resistance. We can just move this up to take into account that spike up at 7.3, around about 7.326. I'm still happy with the lower band. If anything, you could bring it up ever so slightly to 7,305, but really because it's the round number, 7,300 is still pretty good. Let's have a look at this one. This is testing at 7,292. So what I'm going to do is, looking at this, I'm going to split this into two zones. So really, we're going to have this one coming up into 7,292 to 7,300. So there we've got the round number right here. And then we've got another one just up above sitting at around about 310, all the way up to 325 right here. Both of these levels, if the market is pressing back up, good resistance. If we're starting to break up above the previous highs now, it's also a good level of support to look for those bounces up toward this gap level. The gap level, especially if we're breaking up with a nice strong bullish move, it's a great level for bulls to start looking to take profits. You've got to remember we've had a very strong move down. If we're starting to press up, certainly the more cautious traders will be looking to book profits at sensible levels. The gap is certainly a sensible level. Down below there, we still have 7280 down toward 7260 right here. We're just actually testing at this level at present. This remains a key level of resistance at present. And we've got our two levels down below, 32 to 13 and 205 to 185, good levels of support moving forward also. And those are really the main things I'm looking at on the FTSE as we start to come into next week now. So the very key levels are up above at resistance and down below at support. In between, we have 1, 2, 3, 4, and 5 levels worth watching as really support down below right here. If we're starting to break down below this level here, it then becomes worthwhile looking for the resistance and the moves down to our key level. Up above, we've got resistance here, two levels of resistance up here. Also, if we're starting to break above this one again, for those bullish bounces up into the key level of resistance. And really, longer term now, the FTSE is going to give us its clues as it starts to break one of these levels. At present, we've had a very strong move down. We're just sort of chopping sideways. We're a little bit more neutral until the market starts to give us that price action evidence. Okay guys, so as always, I hope that was helpful. I hope you all have a good trading week next week. I'm James Orr, and thank you.